Hey everyone, George here. So if you're a contractor, builder, electrician, plumber, roofer, concrete guy, or any of the other trades, here's a fact. Most contractors overpay in taxes, but not because they're making too much money, but because they miss deductions they're legally allowed to take. So today I'm breaking down the top 10 tax deductions contractors need to know, and I'll explain it in plain English, not IRS jargon. And as a quick heads up, this isn't some creative accounting. This is playing the game the way business owners are supposed to. So without further ado, let's get started. So number one deduction, vehicle and truck expenses. If you drive a vehicle for your business, say a truck, a van, or even a regular car, this is usually one of the biggest deductions available. You generally have two options, either the standard mileage or actual expenses. So with the standard mileage option, you track your miles and take the IRS standard mileage rate, which for 2026 is 72.5 cents per mile. And if you went the actual expense route, then you would get to deduct gas, repairs, insurance, registration, depreciation, lease payments, and there could be other things, anything really related to the vehicle. So as a contractor, a reality check, if you have a truck that's used heavily, you're going to benefit more by taking the actual expense method. And another thing, if you, for example, use the vehicle 80% business use and 20% personal, then you get to deduct 80% of all the expenses related to that vehicle if you take the actual expense method. So if you spent $12,000 on the truck and it's 80% business use, you get to deduct $9,600 of those expenses. So second set of expenses you don't want to miss out on are equipment, tools, and heavy machinery. So anything like power tools, saws, compressors, nail guns, generators, skid steers, trailers, excavator, these can either be expensed or deducted through depreciation. So generally anything under $2,500 you can expense right away, and anything above that, it would potentially, you would capitalize and take depreciation. But with 2025 and 2026 bonus depreciation rules, effectively you could end up expensing those right away. Another thing for these items is repairs and maintenance is usually deductible too. So like oil changes, small repairs, service maintenance, replacing parts, these all become deductible. But again, major improvements or big upgrades, they over $2,500, they could be subject to having to be capitalized, so they'll be fixed assets. So you could speak to your accountant about that, but basically all these items would potentially get you a deduction. Number three, office supplies and admin costs. So most contractors focus on trucks and tools, but forget about the boring stuff, which can really add up. You can deduct things like printer ink, paper, clip, work binders, software subscriptions, job management apps, bookkeeping apps, phone chargers, postage. And yes, all this stuff is worth tracking. I highly recommend just getting a QuickBooks Online subscription. It's like $30-40 a month, and being able to like consolidate all these expenses and income into like one place. And these things can really add up. They could be like a couple grand a month between everything easily. Number four set of deductions, advertising and promotion. If you're spending money to get work, it's probably deductible, and that includes running ads, business cards, yard signs, truck wraps, website, lead generation, branded shirts and hats. And I mentioned ads, but it could be Facebook ads, Google ads, Yelp ads, all that. If it's meant to promote your business, it's a legit business deduction. So contractors who want to grow should be spending this money anyway, but at least make sure you get the deduction for it. Number five set of deductions, hiring help. So if you hire people to help run your jobs, you do get to deduct their payroll or payments that you make to them. But here, what's important to call out is that classification is very important. Because here you may be paying employees, which are W-2, contractors, which are 1099, labor-only crews, admin staff. So payroll, contractor payments, and labor admin costs are typically all deducted. But it's just important to note that contractors can get in trouble when they pay somebody like, say, a subcontractor, like a 1099, but really they were an employee, or vice versa. And a lot of times, if they don't issue the proper payroll forms, they could get in trouble for that too. So all your employees would need quarterly 941s, annual 940s, in addition to all the state filings, and also W-2, W-3. All your contractors would need 1099s at year end. So you got to make sure you're filing all these properly. If you ever need help with any of these, our calendar link is down in the show notes. We're happy to help. Number six set of expenses, business insurance. Insurance could be one of the most forgotten set of deductions, and it's one of the big ones. Construction businesses often have general liability, workers' comp, commercial auto, equipment coverage, umbrella policies. If it's for business protection, it's generally deductible. And yes, if you're a legit contractor trying to grow and scale a legit business, you should be covered. So definitely don't miss a write-off. Number 7, rent and lease payments and storage yard. If you rent a shop, a warehouse, a storage unit, an office, equipment, and yard space, those payments are usually deductible, even if the unit being rented is not fancy, like a small unit, where you store your tools and materials. If it's used for business, then it definitely counts as a deduction. Number 8 set of deductions is the home office deduction. Now, this one gets contractors nervous. They think home office deduction and they think it might be an IRS audit magnet or something. But here's the real rule. If you have a part of your home that's used regularly and exclusively for business, then that area will qualify. That means you could use this space for job scheduling, invoicing, bookkeeping, project planning, customer calls, estimating. What may not work is I answer calls while sitting on my couch. So if you do this right, you can deduct a portion of your rent or mortgage interest, utilities, insurance, phone, and internet. And for contractors who run their business out of their home, like a lot of my clients run it out of their garage, this can be a solid deduction that adds up fast. Number 9, meals, travel, and job-related trips. So this is where contractors can either save a lot of money or get sloppy and increase their audit risk. So for business meals, certain meals can be deductible, assuming that you're having the meal to generate business, including meeting with a client, a business referral partner, someone you're doing business with. But it can't just be you and a friend having lunch or whatever. Like if it ever came down to it, you just need to prove it with either a calendar invite, some sort of an invite, or more than just like the actual receipt of the meal. So there just needs to be provable, real business connection. So travel expenses. If you travel out of town for business, you can deduct airfare, hotel, mileage, taxi, rideshare, meals, baggage fees. But if you have personal travel mixed in, you got to separate the costs. So effectively, the business trip or the trip needs to be primarily focused on business purpose, some sort of like either client meeting, referral partner meeting, a seminar, a convention, something going on related to your work. And it would be good to track who you met with and your notes, or save any, like, again, invites or flyers or anything that proves that you made this trip for a business connection. Number 10, startup costs and professional fees. This is for guys who just formed an LLC or a new construction business and are taking things seriously and trying to grow it. Startup costs might include setting up your business, early marketing, initial legwork, initial accounting work, planning and research costs, and professional fees may include CPA prep fees, bookkeeping, attorney fees, and consulting. These are very often deductible or partially deductible depending on the timing and the structure. If you're paying somebody to help run your business the right way, it usually counts and it's a deductible expense. So those were 10 broad category items that I want to throw out there. Make sure you don't miss any of these deductions as you're maybe wrapping up the bookkeeping for 2025 and as you're starting your 2026 tax year. Again, I highly recommend getting a QBO subscription, QuickBooks Online, and having all these like assembled, assorted there and reconciled. And before we wrap up, I want to throw a few more bonus deductions out there just so it's on your radar. Retirement plan contributions, education and job-related training, business licenses and permits, interest on business loans, and if you're on an accrual basis, bad debt. So these are all deductible expenses. So I hope this helps you have a comprehensive coverage of 2025 as you wrap up the accounting for that year and hopefully start 2026 off on the right foot. If any of this applies to you or you have any questions, our calendar link is down in the show notes. Please feel free to book a time. I hope you found this helpful and see you in the next one.